The real estate market in China is in freefall after Evergrande was ordered to liquidate by a court in Hong Kong. I'm your host, Chris Thompson, and this is an IRL Media News Hot Take. Let's get into it. The Chinese real estate conglomerate Evergrande has been ordered to liquidate after amassing 2.39 trillion yuan, which is about $333 billion for you that don't know how to convert yuan to US dollars in their heads. The liquidation order comes as China's real estate firm and its overseas creditors failed to agree on how to restructure the company's massive $33 billion in debt that they've been trying to negotiate over the last 19 months. The Shenzhen-based developer has already filed for bankruptcy in New York back in 2023, so it looks like liquidation it is. I can't begin to explain how bad this is for China's real estate market, but also for the investors outside of China who scooped up their debt obligations for pennies on the dollars in the belief that the Chinese government would never let Evergrande fail. They hoped that the Chinese would view Evergrande as China's version of the United States' banks that were too big to fail, like Goldman Sachs and Morgan Stanley. But it turns out the Chinese thought that Evergrande was more like Lehman Brothers and let it fail anyways. Now that the Chinese real estate market is going through a period of constriction, the market will ultimately right-size itself, but probably at the expense of not only investors outside of China, but also Chinese families who saved up and bought real estate from Evergrande that they will never be able to live in or sell. If you like this video, do me a solid and smash that like button and subscribe to our channel. Thanks. I'm your host, Chris Thompson, and this has been an IRL Media News Hot Take.